Hey, what's going on everyone? Matthew from therighttrader.com here. Today I'm going to be going over the 10 most important and best stock trading tips to become a successful trader. And these are sort of a little list of tips that I put together from my own experience, and I think it'll be really helpful for you guys to keep this in mind. And I'm basing myself off an article I wrote on my website a couple months back. So if you want to actually read the article, I'll leave a link in the description below. But yeah, I'm going to kind of guide you through this and also get into some of the details, showing you some examples of the stuff I'm talking about over here. So let's get right started with the first tip, okay? The first tip is to be patient. Super important, super obvious, but it's harder said than done, right? And this is so key when it comes to trading stocks and the stock market in general, whether you're investing or trading. It is just to be patient and to not get caught up into the hype, right? So, pretty obvious. I can pull up any chart really, and you always get the same results. Would you either prefer investing here or down here, right? The answer is obvious. You obviously want to enter your position here and catch the rise. It'll be much more successful and a less painful way to invest and trade. And this all comes down to patience, right? Don't get caught up and buy a stock just because it's hot in the moment. You really want to wait for the perfect entry when everything is set up correctly, when it fits the bill sort of, and it corresponds to your trading strategy. That's the right time to enter, right? Buy low, sell high. It always comes down to that, and it never fails really. So yeah, that's the first thing to always keep in mind. Super important. Next up, we have a trading plan and a trading strategy, okay? And this is really easy to sort of ignore if you're sort of a beginner, but it's also super important, and you need to have a trading plan to be successful. That's really what it comes down to. And you don't have to make it complicated, but it's always good to go into some detail, and you can get pretty specific, right, with like only a certain category of stocks that you trade, times a day you trade, stuff like that, right? You can really get into some detail, but for the most part, it's sort of getting down your trading strategy if you're going to be long-term, short-term, or medium-term, and stuff like that, right? So that's something to keep in mind. I might actually make a video on that to sort of help you guys out on creating a proper trading strategy. So yeah, make sure you sort of write some of that stuff down and at least keep that in the back of your mind when you're trading, okay? Third tip, cut losses quickly. So this is sometimes a little bit of a contradicting tip, right? Because it really depends on your trading style and investing style, because everything in this article also goes for investing. But it usually is a good idea to cut your losses quickly, right? And the reason for that is simply because if we look at Apple, may not be the best example, obviously, because it's a great stock and it keeps going up, but it's pretty obviously, right? If you bought around here, or a better example actually is just to say, for example, let's move up the time frame. Let's say you bought over here, right? Everything was nicely set up, and you were expecting the stock to go up, right? But for whatever reason, maybe some bad news or something, the stock kept going down, right? And that obviously wasn't what you were expecting. That wasn't your plan. So now there's no telling when it'll stop, right? Especially if it's not a big brand name stock that's a stable company. The stock could go crashing for years, right? So really be careful of that, because you'll quickly end up with a like minus 40% loss on your position, right? And then you just become a bag holder. It's not a fun experience. I've been there before. So to avoid that, you simply have to cut your losses quickly, right? Set a stop loss somewhere where you think that if that level is hit, it'll keep going down, and that way you can limit your losses, okay? So pretty important, but yeah. Fourth tip would be to just simply learn from your mistakes, okay? And this sort of goes back to point number 2, trading plan / strategy. It's also really good to have a trading journal, okay? A lot of people have that, and they basically just mark down their trades, when they entered, time of day, the loss or gain on their position, and sort of what made them enter the position. And the reason for that is just to simply find patterns, right? Find patterns for what works, okay? and find patterns where maybe you realize that you buy when there's too much hype in the stock, for example, right? You get caught up in the hype and then you get a loss, and you've done that repeatedly. Well, that's something that you have to try to fix, okay? So that's a great way to learn from mistakes, is to actually make a trading journal. I might also make a video on that to help you guys out as well. Tip number 5, trade what you know. This is a little bit hard for some beginners because it's really easy to want to sort of try to hit it big, and yeah, there's so many stocks out there, but at the end of the day, the best stocks are the big brand name stocks and the stable companies. They're just the easiest to trade and invest in. And it doesn't mean that you can't go into some more niche stocks, I guess you could say, but there's going to be some more risk involved, right? And if you don't want to put on that extra risk, stick to what you know, right? If you're into gaming, let's say, trade video game companies. So yeah, just go for what you know, and you already have knowledge about, right? Because that already gives you a bit of an advantage over a lot of people. And a little pro tip that I wrote in my article is to just avoid trading penny stocks altogether. Once again, it's super easy to get into the penny stock hype, but for most people, it's just going to end up in some pretty big losses. So yeah, I might talk about that a bit more in another video, but usually penny stocks will lead to big losses for most people. That's just the truth of it. Next, point number 6, tip number 6 is to let winners ride, okay? And once again, we can go back to Apple stock. The point behind this is, let's say you got in around here, okay? And your position was going up, and all of a sudden, maybe, let's say around here, okay? You saw a little bit of a drop come in, and you quickly panic and decide to exit the stock because you already got a nice gain, and you were sort of thinking, why risk my earnings, right? Why risk these great returns that I just got? Might as well jump ship now. Well, if you do that, you can miss out really quickly on some massive gains, right? So you got to be careful with that and really let your winners ride, especially when you get in a stock and it just starts going up right away and everything is working in your favor. That usually means that you got in at the right time and that money is still flowing in. So it sort of depends on the situation, but you've got to be careful with that because obviously you do want to cut your losses, and that's why to decide if you should cut your losses or let the winners ride, you have to have your trading strategy in place and know the criteria for each things, right? So that's something that you kind of have to decide on your own. But this is just a known tip that usually works well, is to hold on to your winners, right? Because if it's a good company and you got in at the right time, there's no reason to exit early, right? So yeah, but you do have to be careful because it really depends on the situation, I would say. Tip number 7, always look at the risk reward of the trade. This is, once again, something that a lot of beginners just don't pay attention to, and it's so easy to do that there's really no excuses, and it'll make usually drastically better trades overall. So let me show you how to do this. You guys can go to tradingview.com. It's a charting website, really good charting website, and they have a tool over here that actually allows you to calculate your risk reward. Okay, so let me show you, for example, right here on Apple stock. Let's say you decide to get in right here at the bottom of the candlestick, not all the way at the low, sort of right here, okay, low of day, or close, sorry, and you put your stop loss right at the bottom of the wick, okay, at the low of day. So enter over here, put your stop loss here, and your target would be to sell once it hits this resistance over here, right? And you can ignore this for now because obviously you never know what's going to happen in the future, but you're planning out your trade and you decide, okay, I'm going to exit once it hits this resistance here if it starts falling back down, okay? So here you're risking 1.6%, a loss of 1.6% if it actually ends up hitting your stop loss, but your potential return would be 12.15%, right? This is a great ratio, right? That's like over 10. So this is a great trade right here where you would really be, let's see, if you want me to sign up to continue. Yeah, you would really be in a nice position to put the best chances on your side, okay? But let me show you another example where you wouldn't want to enter the trade, okay? Let's say you're not really paying attention to this stuff, and you just decide, I'm going to enter right over here, for example, because it already went up and there's a little bit of a drop. So I'm going to enter right over here, and or maybe right over here, okay? And you say, okay, I'm going to put my stop loss sort of at the support level right down here. Let me show you that just right like this, okay? So you enter over here, you put your stop loss where all these supports are, and you think to yourself, okay, I'm going to trade up to at least over here, right? And what you can see here is your risk is actually bigger than your potential reward, right? So this is just a horrible idea, right? You'd at least want your reward to be double your risk, okay? And obviously, you're almost setting yourself up for a loss if you're trading this type of risk reward ratio, okay? So be careful with that, and you can go ahead and check out this tool. It's really useful. So next up, tip number 8 is to not be unrealistic, okay? And it's fine if you want to aim big, but you got to be careful on trying to hit home runs, because usually you can get caught up into trying to make it big on one trade, and it'll kind of mess up your mindset and lead to maybe you making the wrong decisions or just being disappointed, right? With like even a winning trade, and that will just put you in sort of a losing mindset where you're going to end up making bad decisions, and it's just not a good mindset to be in overall, okay? So be careful with that. Just keep your expectations realistic, and remember, slow and steady wins the race, right? It's much better to get some small gains that add up quickly than a big winning trade and then a massive loss, right? That won't really get you anywhere. So yeah, be careful with that, right? Number 9, avoid trading around big events, okay? I usually call these binary events. That means that an event is coming that'll either shift the stock a lot towards the downside or the upside, right? But usually these binary events, stuff like press releases, earnings, just news that's expected in the markets, are unpredictable, and you're basically taking a bet, right? So at that point, it's completely random. You have no control over what's going to happen. You have no idea, really. And like I always say, for this type of stuff, your risk is actually probably not going to be worth your reward, right? I mean, losing 30% of your position in a day would be really painful and hard to recover from. So why risk it, right? And finally, tip number 10, make sure to keep on learning, guys. This is super important. Always keep up to date with some new trading strategy, try different stuff out, and really try to come up with something that works for you, okay? That'll really be the key in you becoming a successful trader. It's just to not give up and constantly learn, right? Always make sure you're up to date with your stuff. Stay in touch with the markets, right? Read up and read some books and stuff. Watch my videos, I guess, and you'll become a better trader. You'll improve your skills, and you'll actually be more prepared when you're trading. It's as simple as that. So yeah, this is it for this video. I hope you guys enjoyed these tips. I hope these help you out a bit. And thanks for watching. Make sure to leave a like and subscribe for more videos.